what I want to talk about this morning are the 3 red flags, because I've got a bonus red flag when it comes to you as a buyer working with a lender. And the bonus is what kicked off this idea to have 3 red flags this morning, because there's a lot of stress around buying a home. Even completing a loan application and gathering your documents and working with the lender is stressful. Finding the right home, negotiating it, getting enough money to closing, getting a seller concession, getting to the closing table, working through the inspection. I mean, you could break this down and make it really simple, but then having a lender who does not communicate and or takes advantage of the situation could make it more stressful than it even needs to be, than it already is. So I want to highlight 3 red flags and a bonus, right? Because it's the bonus that got me stirred up this morning. So here's red flag number 1. When you're working with a lender, you want to make sure to be asking the questions, to be partnering with your real estate agent, to be able to know if this lender is going to lead you down the right path. Flag number 1, a lender who does not explain points or buy downs. So what does that even mean? What is buying down the rate? Because any lender can quote any rate, really. I mean, it's a matrix. So you have a market rate, and then you have a rate I can buy down to. And then, of course, we've all heard you can also do a permanent buy down, a 2-1 buy down, a 1-1 buy down, temporary buy downs, all the different terminology for getting that rate lower. But what does that even mean? Like, if I buy down a rate, what am I doing? So there's a market rate, and for most lenders, the market rate is very close to one another. Now, a market rate is that rate that the secondary market will pay for that loan, given the economic factors that are happening right now. So you might have a market rate, given a set of circumstances, at 6.5%, and that would cost you no points. You'd also get no credit. Now, I could go higher. I could take a 6.75 rate in that case and maybe get 1% back as a lender credit to help me offset my closing costs. Or I could pay a point and drop it from 6.5 to 6.25. So that would reduce my monthly payment, but it would cost me 1% of the loan amount up front to buy an interest rate lower than the market rate. Ultimately, the market rate is what an investor will buy that instrument at. It's an investment, right? You think about a mortgage. When we originate a 30-year fixed mortgage, we sell those mortgages as mortgage-backed securities on the secondary market. And based on the economics of the day, that paper has value. So if I'm selling you, the consumer, the buyer, I'm giving you a 6.25 rate, well, then that's below market. And as an investor, if I'm not getting my full return, I want money off from the very beginning. That's the discount points. So the lender doesn't get to keep the discount points. They're packaged up and it's part of the overall pricing structure. So not being able to understand that and giving you your options could be not giving you the best product, especially when markets get really tight and maybe it costs very little to get down to a much lower interest rate. If I can knock down that monthly payment substantially with a low or limited cost, I want to know the options for buying down that rate. Or, especially in a market where maybe a home has been sitting on the market listed for a while, I want to be able to negotiate where the seller maybe pays those points for me in the situation of a 2-1 or a 1-1 buy down, a temporary buy down. Say the market rate right now is 6.5, what we were just talking about, same example. And now I do a 2-1 buy down so that for the first year, that interest rate acts as if it's 2 points lower. It's 4.5. And then the second year, it's 5.5. And then it goes back for the next 27 years as a 6.5% interest rate, or I should say the next 28 years as a 6.5% interest rate. That temporary buy down allows me to negotiate with the seller to get the best product available. So not having that explained to me to what all the options are today based on the current market rates puts me behind in knowing what my best financial solution is. All right, so number 2 is not explaining when to lock or when to float. A lot of people will simply lock at contract. Once you have an address, you can lock. Now there is something called a lock and shop where you can actually lock prior to having an address, and typically there's an additional cost for doing that, but that is an available option. But most people will lock at contract. Now, if you're in a volatile market, you want to lock at contract because if the numbers work, then the numbers work. If the monthly payment meets your budget, if the interest rate is fair for what the market is providing at the moment, and overall based on that purchase price, the loan amount, the monthly payment, it works, then lock it in. This is not a time to gamble. This is typically one of your biggest investments and your biggest assets, so you want to make sure that you know what the numbers are from the very beginning. Because if interest rates go up while you're under contract and you didn't lock in the interest rate, then that could make it so that you no longer qualify to purchase that home. Now, there might be times based on either your closing date or market conditions. Now, if we're looking at market conditions and we see a week, especially a week like this week where we know on Friday we're going to have the jobs numbers, and then next week we're going to have the CPI inflation numbers, we might see a little bit of a rebound or a drop from where the interest rates have been. We might want to float into that depending on your assessment of the market. Now, I could tell you my assessment, but again, I'm only going to advise you as to what I know, and then I'm going to look to you to make the final decision. But it's my job to educate you on that, to know what the market is doing, to be able to support you with that information so that you can make the best decision for you and your family. So being able to time the market, not gamble on the market, takes skill and education. You also want to look at what's your closing date. You might be just outside a 30-day window or a 45-day window or a 60-day window where that next block of time gets more expensive. So you might want to either wait until you get just right inside that window, or knowing consciously you're going to have to pay for an extension. Meaning, if I'm closing at 35 days from today, and I complete the loan application, I'm under contract, I've submitted all my documents, I want to lock in my interest rate, I want to do that on a 30-year fix based on the pricing that's provided to me, but I'm not closing for 35 days. Well, I could have the choice of moving in my closing date or locking on a 45-day lock, which is typically at a cost, or I could pay for a 5-day extension. So lots of options based on the timing of the contract and the closing date. None of them are wrong, and all of them just simply options. Here's the third red flag, is not advising on all of the products available. There are a lot of products, whether we go with broker options, whether we go with a jumbo option or a high balance option, whether we go with down payment assistance option or VAs or USDA loan options or any number of the non-QM options. There are lots of options for a lot of different scenarios. Most scenarios don't just have one solution. Now, there might be one solution that rises to the top, but many times it's the creativity and the strategic nature of your lender that's going to provide you a clear path to the closing table. And then it's going to allow you to get to the closing table should things happen between here and there. Because there's a lot of humans involved in a mortgage loan, whether that's the inspector or the appraiser or the underwriter, the processor, the real estate agent, the lender, the title company. There are a lot of people and a lot of documents that are needed throughout the process. And should one of those documents not turn out to be exactly as expected, a low appraisal, issues on the inspection, maybe there's something on the title work, maybe it needs a survey and something comes up there, any number of things. Working with a lender that has access to all of the programs and products allows you the ability to be flexible should something happen. It also gives you the flexibility to get into the right product. I've had people tell me that their lender doesn't do something. My lender doesn't do down payment assistance. I heard you did. I'd love you to work with this client. Or my lender doesn't work with the affordability programs. I heard that you did. Or my lender doesn't have access to the non-QM programs or the portfolio programs or a bridge loan option. I heard that you did. Those are the things that stump me. Well, how can you be a lender that's fully serving your clients if you don't have access to all the products that you know that they'll need? So especially down payment assistance, there are a lot of lenders out there that simply don't do them because you don't make very much money on them. They're kind of like the loss leader at the grocery store when they put something right out front that's deep dive on a sale, so you pick that up and you keep shopping. Those down payment assistance programs, because they're government backed, typically come with a very low commission schedule. And that low commission schedule might be much lower than, say, doing an FHA loan. FHA loans are notoriously better paid than, say, even a conventional loan. So as a lender, I could choose to move you towards an FHA loan specifically to get the highest margin or highest commission on your transaction. Or I could choose a conventional loan over a down payment assistance loan because while a conventional loan doesn't make as much money as an FHA, it makes more money than a down payment assistance. That is not the right way to do business. It doesn't provide you all the solutions that you need to make the best decision for your family and your financial success. So giving you the slew of options is critical. Not only having them, not only having them, but willing to do them is key. And then here's the bonus. This is something that I was just reading a lot on social, and it kind of got us riled up. In fact, it got Cara on my marketing team really riled up, and she let me know that it was happening. So there are lenders out there, and I'm not going to name names, but there are lenders out there that are charging a non-refundable loan or application fee. Or the moment you go under contract, they're immediately charging your credit card for the appraisal before you have the ability to commit or lock in your interest rate. All of those I don't agree with. It strips away your ability to either shop interest rates, shop lenders for the best solution, or shop a lender that has access and is willing to do the solution that's best for you. Who's the lender that's committed to your success? It might not be the one that you got the original lender letter from. As you talk to them, you might have determined that they're not in alignment with what your goal set is. And if they're not in alignment and you've already paid them a non-refundable fee, they're banking on the fact that you won't want to change, that you won't want to leave that money behind. And I'll tell you something right now. I'm going to make this promise to you that if you've paid a non-refundable fee at a lender that doesn't have the solutions or won't access the solutions that we know are best for you, I'll pay you back for that non-refundable fee. That's how riled up I get about that, and that's how much I care that you have the ability to make the best decision for you, not get rooked into something just because you gave a non-refundable fee. Well, that's our 3 red flags and our bonus and our live for today. I hope you guys have an awesome rest of your week. reach out if you want to know all the options that you have available, if you want to go through and make a plan for buying your home. We want to go to work for you. Nicole Rueth with the Rueth team. We'll talk to you soon.